administrative requirement for the S04 return. A brief overview of the various sections of the S04. Mandatory online filing requirements, TAJ's support for the online registration process, a demonstration of the online filing process, and benefits of good record keeping. Jamaica has a self-assessment system which places the responsibility on the taxpayers to declare the results of his or her business activity. This places the responsibility on every taxpayer to file and to declare to the Commissioner General what your income and expenses are, and at the end, what your tax liability is. So all taxpayers are required to file and to declare your income tax return. Section 67 of the Income Tax Act is the legislative support as to why it is that every taxpayer needs to file and declare your S04 income tax return and your S04A, which is your estimated income tax return. The deadline for this filing is normally the 15th of March, but for this year, because the 15th of March will be falling on a Saturday, the deadline is pushed forward to March 17th. Now, the S04 is your personal filing declaration. It is filed by self-employed persons. This declaration is what you use to declare to the Commissioner General your income and expenses. In addition to that, you are required to file what we call the S04A, and this is where you would calculate your estimated contributions to Tax Administration Jamaica. This incorporates your NHT, your NIS, your education tax, and your income tax. You would, of course, be required to pay these quarterly payments during the current year. So the filing due date of the S04 and the S04A, for the S04, it is March 15 for the previous year's assessment. And the S04A is for the current year's assessment. But each of them are due March 15, and again, I say for this year, it's March 17th. The liability in relation to the S04A is paid quarterly. March 15, June 15, September 15, and December 15. And this gives rise to, like I have said earlier, the S04A being moved from March 15 to being required March 17. Now, you do not want to be late in filing your income tax returns, because filing late means that you are in risk of the late filing penalty. And TAJ does not want you to pay any late filing penalty. We don't want you to pay any more or any less than what you're supposed to pay. So that $5,000, when you file late, could be used towards the taxes. Am I right or am I right? So therefore, let us not be late, because we don't want you to have to pay the late filing penalties. All right, so be on time. Now, the S04 and the S04A, like all the other income tax returns, are required to be filed online. It's mandatory for it to be filed online. So please do not be like some of the taxpayers that I see who go on the online portal, download the form, fill it up, and send it in a web message and say, I cannot find where I am to submit this return. Please see it in the web message. Please do not let that be your reality for this tax filing season. All the documentations must be added to the return in support of the declaration that you are making on the income tax returns. For example, your capital allowance schedule, because the schedule is not entrenched in the return, you must, of course, populate the capital allowance schedule and attach it. For those other persons who have like pension certificates, you would want to scan and attach those certificates as well. So all the schedules that are not entrenched in the return, you're required to complete them and submit them as attachments to the income tax return. All right, so let's talk a little bit about the structure of the return. It is so easy to get lost in all the different sections of the return. We're afraid of it, we run away from it, but today we want to break it down a bit for you to let you understand how simple and brief it really is. So here is the structure and flow of our S04 income tax return in basic terms. The gross income that you have is what is the first thing that will be required to go on the income tax return. From your gross income, you are allowed to take from it, reduce it by your deductible expenses and exemptions. This brings us to statutory income. This is the income that we will be calculating income tax and education taxes on. For the contribution benefits, they are calculated on gross because the government of Jamaica wants you to get the maximum benefits from your contributions. So those are calculated on gross income, but education tax and income tax is calculated on statutory or chargeable income. Can you imagine? So you are allowed to back out your deductible expenses and your exemptions before you arrive at the income that is chargeable for education and income tax. Now, after you have arrived at statutory income, the threshold is then subtracted from what remains. This remaining balance is what will be taxed at the rate of 25% for those whose statutory income will fall below 6 million and below. So here we have it, 6 million and below, you will pay the rate of 25%. But if your statutory income is above 6 million, then you will pay the tax at the rate of 30%. So after the threshold is removed, and you arrive at your tax payable, something else is given. Look at, as much as we want to say, how good this government is. It's not because I work with them. No. What comes out afterward are your credits. This will take the form of the capital allowance that we spoke about earlier. After you arrive at what you're to pay, the government said, I like these people, they are trying to be compliant. So what I am going to do is allow them to further reduce the tax payable by the credits, which would be the employment tax credit, the capital allowance credit. These are given to reduce further the tax that you are liable to pay. This brings you now to the tax that is due. Come on, let's give the government a clap. Even if it's me alone. All right. Now, let's go into some very important parts of the S04 return. We want you to pay very careful attention to these sections and what they really do. Now, let us talk about the NIS reference number. What is the importance of this number? Why do you need to have it? Why do you need to put it on the return? Your NIS number plays a vital role in the S04 income tax return. Why? Because it is what the return pulls from in determining your age, because the two first digits of the NIS number are your year of birth. And so this number is what will be used to determine if you really are eligible for the age exemption. So none of us cannot trick the system and say we're born 1901 because we want to get the age exemption. Oh no, this is why the NIS is there to tell us of your eligibility for the age exemption. So it is very important that you put in your correct NIS. Don't just make up a number like I have seen it. persons don't have the number, they say, make up a number and put it in there, right? You cannot do that. You have to get ready all the necessary information that will be required to submit an accurate S04 income tax return. And so that is the importance of your NIS. Let's move down to box 8 that deals with your residency status. Did you know that as a resident of Jamaica, this is the box that determines your eligibility for the income tax threshold? If you declare the income tax return as a non-resident, you are not going to be getting the income tax threshold as a reduction to your statutory income. And therefore, you will not get the benefit of it declaring as a non-resident. But declaring as a non-resident, there's a little bit of additional benefit that the income tax legislation allows. This resident who declares as a this person who declares as a non-resident will only pay tax at the rate of 25%, regardless of how much the income may be. As a resident, if the income is above 6 million, we get the benefit of the threshold, but we will pay tax at the rate of 30% for every dollar that is above the 6 million. But as a non-resident, you don't have that problem. You will only pay income tax at the rate of 25%. So it is very important here that you select the right box here. All right. Now let's move to box 11, the start date of trade. Why do I need to put in the start date of trade on my S04 income tax return? I don't want them government people to be monitoring me and knowing my business. But let me advise you, this is the box that the return pulls from in determining how much losses you can claim, the losses that you can claim in the current year. Because if your business is 6 years and under, you are allowed to claim the full amount of your losses. If the income of the business is $10 million or below, you are allowed to claim the full losses that you are carrying forward. But if the business is over 6 million, 6 years, and the income is over 10 million, then that loss is restricted to 50% of your statutory income. Now, let me pause here to say something here. It is not 50% of the loss. It is 50% of your statutory income that is going to be used to write off prior year loss. So let me give a little example. My statutory income this year is $100. And my loss that I'm carrying forward is $150. I will only be able to use $50 out of my statutory income to write off my $150 loss. So it means I will only be able to write off $50 from my $150. So the loss I will carry forward to another year is $100. And I will now be paying the tax on $50 of my statutory income. Now, I will pause here to say, if Geneva is not clear, be free to ask your questions. Put them in the monitor, tell me to repeat. Don't be afraid. Please ask questions and access the chat room because there are monitors there that are waiting for you to submit the questions to them. Now, let's move down to box 15 and 16. Are you gainfully occupied in Jamaica? Are you gainfully employed? Is TJ trying to trick me? Why them asking me all them kind of wordy something here? But believe me, these questions are entrenched in the Income Tax Act and they play a vital role. They play a vital role. Now, what does it mean, are you gainfully occupied in Jamaica? It means you are actively engaged in earning from the island. You're actively engaged in whether employment or self-employment, in earning an income within the island. It means that you are bodily here doing something to earn an income here in Jamaica. But then, if I am bodily here, why do I need to answer am I gainfully employed in Jamaica? Why are these people, trying to twirl my head around or something? Oh no, oh no. You can be gainfully employed to Jamaica, but not necessarily in Jamaica in specific categories. One is if you are with an embassy or a high commission, you are still employed to Jamaica, but you are carrying out your role in these capacities in another country. So you see that the income tax people who put the income tax legislation together, them was really thinking, them was thinking. All right, so you can be still gainfully employed to Jamaica, but you're not here in these specific categories, to the embassy, to the high commission or consulate. So therefore, the legislation was curtailed in a way with these questions to catch these persons as well. And don't get the word catch in the wrong way. All right. So you can be gainfully occupied in Jamaica and you can be gainfully employed in Jamaica, all well and good. But this last one, as it relates to the gainful employment, was set to make sure that it covers all persons who will, in these specific categories, be gainfully employed in Jamaica, but not bodily here in Jamaica. Are you employed to the foreign embassy, high commission, consulate, or agency of the United Nations or any other international organizations under Diplomatic Immunities and Privileges Act? Why do I need to declare this? You need to answer this if this is you, because it will allow for the special rate of tax that is your education tax and statutories will be calculated on. The embassy workers are treated pretty much closely to an employed person here in Jamaica. And so because you want to benefit from the exemption that it is related to the income tax for those UN workers who are exempt from income tax, you must select this box. And because you want to benefit as an embassy worker from the reduced rate as it relates to education tax and NHT, you want to select this box. So it is from this box that the return pulls for these persons who are in the categories so that the right rate of tax is applied to you. Remember, tax administration says, pay your fair share, no more and no less. Then we move right down to Section B of the income tax return. Why do we need to put in income from trade, business, vacation, or profession? You put this in if it is that your income is not from employment, like the return is divided into sections A to H, and it is created that way so that it can cover all the different types and sources of income. So if you are a self-employed person and you're wondering where on the return would my income go, your income would go on the income from trade, business, or profession or vacation. Remember we talked about in the little slide earlier that gave us a summary or a brief flow chart of the S04 income tax return, and we talked about the gross income that goes in first and foremost, and then it takes in consideration your exemptions and your deductible expenses. Well, here it is right in view. After your gross income is put in, you are allowed now to put in your business-related expenses. And let me say that word again, business-related expenses. This does not include your personal rent. Yes, it is a personal income tax return, but it is only the business-related expenses. These are the expenses that the business you would have incurred wholly and exclusively to earn the income. This means that you could never, any way at all, have earned the income without incurring these business-related expenses. Now, the term wholly and exclusively is entrenched in the income tax legislation. These are the expenses that is being allowed as deductible expenses or expenses that are used or allowable to reduce your gross income in bringing you to the statutory income. So again, please do not ask them in the chat room if your rent from your house can go into your business-related expenses. Say, if I don't have anywhere to live, I cannot earn the tax. I cannot earn the income. I'm so sorry. It is your business-related expenses that are wholly and exclusively incurred that are deductible. All right, let's move right down now to income from rental property. As you can see above that, there is the share of partnership income, a place for that. So if you are, in addition to your self-employment, in a partnership, this is where the income from the partnership will go right above the income from rental of property. Now, the income from rental of property, something I have observed about Jamaicans. If we rent out half side of the house, we are landlords and we have tenants that pay rent. We don't tend to see it as income. But we are here to remind you today, along with the S04 income tax return, that if you rent out a part of your house, the income that you get from it is taxable and therefore should be declared on the S04 income tax return. In addition to that, the expenses that you incur to maintain the rental property. Look how the Commissioner General, look how I'm nice. He says, when you declare this income from rental property, I will also allow you, fair enough, to reduce that income by the expenses you incur to maintain the property. All the business-related expenses, we're always going to be coming back to that. You're allowed to remove it before the calculation of your statutory income. So, for those of you that rent out outside of the house, please declare it on your S04 income tax return because by law, that income is taxable. Let's move right down to or income from employment and offices. So if you are, in addition to self-employment, you have partnership income, you have rental income, or if you only have one of them, the S04 return makes provision for you. So if you have income from trade as well as income from employment, this is the slot where you declare that income. Now, why do I need to bother declare my income from employment? Since them already tax it. The one TJ just love to give us work to do. Let me tell you the importance of this. If you have income from trade, you still need to declare the income from employment because the law requires that you declare on the S04 return your income from all sources, not just your income here in Jamaica, but your worldwide income as residents. We are required to declare the income that we earn on a worldwide basis on the S04 income tax return. This does not mean, however, that you are going to be taxed twice. Not at all. Because the taxes that you pay from your employment income will also be put in the return as a credit to you. Now, another reason why you need to declare this employment income, even though it is taxed at source already, is because each individual is entitled to the threshold only once. So if you get the threshold at employment, and then you file a S04 declaring your income from trade, you are going to be getting the income tax threshold twice. You're going to be getting it under self-employment, and you're going to be getting it in employment. And that is called threshold abuse. Them will come lock you up. No, we don't want that. So you want to declare all the sources of income in one place on the S04 return, where one income tax threshold can be applied once to your total source of income. And that will bring you to a true reflection of the taxes that are due and payable. Further down, let us look at the expense claim. This expense claim form is to be completed, particularly by our sales representative. So you are working with, let us say, Guardian Life or Sagicor, as a sales representative. You would have incurred some expenses for traveling out of pocket. You would have incurred some expenses for staying at different places, hotels, because you are traveling the island in order to earn your income. This expense claim form is very, very important for these sales agents because it is on this form that is going to be used to calculate the refund that may be eligible for you for income tax. Because these expenses that you would have incurred out of pocket, a percentage of it is given to you as a reduction to your taxable or chargeable income. So let's move right along. Section B. Now, I'm going to tell you right here to prepare some questions, your questions to ask. I'm going to pause and ask you to answer your questions. Ask your questions, put them in the chat room. And remember I said, Colleen Williams, our technical specialist, is here in support of you today. So after we have looked at gross dividends or income from investment and other sources, put your questions together. We'll just take a little break for you to ask the questions. All right? So gross income from investment and other sources. If you take note, there are 4 places on the S04 return for dividends, 4 different places. You must know what part, based on the dividend that you are in receipt of, where on this return that it should go. Because it will determine for you the correct rate of tax that is applicable to the type of dividend that you are in receipt of. Gross preference dividends. Let's talk a little bit about that. Gross preference dividends is taxable at the rate of tax applicable to the individual. We are used to hearing gross preference dividends is taxable at a rate of 25%. Not in all cases. Let us look at this little tiny example. If I am earning over $6 million already, remember every dollar in addition to my $6 million is taxed at the rate of 30%. So for the individual that is earning over $6 million, the preference dividends cannot be taxed at the rate of 25% because it is considered to be an additional income to the already $6 million mark that you have superseded. So the rate of tax for you would be 30%. But for like little me, if your income is below the $6 million and you don't have any additional income and your rate of tax then below $6 million is 25%. So to you, the gross preference, the preference dividends is going to be taxed at the rate of tax applicable to you, which is 25%. Because remember, income below $6 million is taxable at the rate of 25%. So I want you to take note right there and remember that. Gross dividends other than preference dividends franked. The Income Tax Act, there is nowhere in it that talks about ordinary dividend. The term in the Income Tax Act is preference dividends other than preference dividends. This dividend is taxed at the rate of 15%. It's taxed at the rate of 15%. Now, you must be careful to put the dividend here that is at the rate of 15%, that is not preference dividends in this box. But why is it unfranked? Let's talk a little bit about unfranked dividends. Unfranked dividends is a dividend that is not taxed. It is not taxed. It is not taxed in the hand of the recipient. It means that the tax on the dividend was either paid already. So in the hand of the recipient, it is unfranked. It is franked, I'm sorry. In the hand of the recipient, it is franked. Let me repeat it. I kind of got mouth twisted a while ago. So franked income is income or dividend in the hand of the recipient that is not taxed. So it is franked because it is not taxed in your hand. In the recipient's hand, you do not bear the tax of the franked income. It was borne by someone else. So in the hand of the recipient, it is franked income because the recipient does not bear the tax. Let me repeat that again. In the hand of the recipient, it is franked dividends or franked income because in your hand, you do not bear the tax. Now, for unfranked income, it is unfranked because in the hand of the recipient, you bear the tax. You will have to pay the tax. So on your dividend certificate, you will see the tax that was actually allocated to you, the tax that you bore on the unfranked income. So let me say it again. I want to make sure I get it clear out there. Unfranked, subject to tax. Franked, not subject to tax in the hand of the recipient. Let me say it again. Unfranked, subject to tax in the hand of the recipient. Franked, not subject to tax in the hand of the recipient. Let's move right now to income from sources outside the island. Here again at box 41, we see gross dividends here. It is important to put it there if it's from outside of the island because, again, it is taxed at the rate applicable to the individual. Box 49, gross dividends other than preference dividends, unfranked income received from companies resident in Jamaica. If it is here that you are receiving gross dividends that is unfranked from companies resident in Jamaica, this is where you need to put the dividend. So, dividend, again, I say, let me say this, is taxed at the rate applicable to the individual. So if it's a company, it is taxable at the rate, if it's a regulated company, it's taxable at the rate of 25%. If it's an unregulated company, it is taxable at the rate of 33 1/3%. Again, let me say this before we move on. Dividends is taxable at the rate of tax applicable to the individual or company or entity in receipt of the dividends. So if it is an individual below 16, whose earning is below 6 million, it's taxed at the rate of 25%. If it is a regulated company, it is taxed at the rate of 25%. If it is an unregulated company, it is taxed at the rate of 33 1/3. Okay, let us pause right here for questions. I did say you were to write down your questions, put them in the chat room, or if you want to ask any questions right here and now, please be free to do so before we move right along. We don't want you to get lost in the process of the S04. So I'm pausing here right now to take the questions. Are there any questions? Karen?
Good morning. My name is
Good
Karen
morning.
with Small Business KT Training Solutions. I have been completing my forms online, but I have noticed in the past that I've been asked to include my income from pension. But based upon what you were discussing a while ago about franked and unfranked income, I feel as though I'm being taxed twice because the company that I worked for, where I received pension from, they already deduct tax from the pension. So why do I need to include my pension income?
I'm going to ask our technical specialist, Colleen Williams. She's going to be taking this one for me.
Okay, good morning, ladies and gentlemen. Yes, so the response to that is that yes, what happened is that Section of the Income Tax Act requires that you declare your income from all sources. So it's not to be, your income from pension is to be included there. You will recall that Miss Allen a while ago would have said that you're to, because the threshold, you may have been granted the threshold against your pension income. But when you bring the income from all sources to the return, you're now able to take the threshold just once against all your sources of income. So you're not being taxed twice, right? Once you correctly account for the pension income, to the extent that you would have paid tax in respect of the pension income, you get to take a credit. And when Ms. Allen gets to the credit section, you will see that you'll be able to get a credit for the tax that has already been paid in respect of the pension. Have I answered the question?
I'm not sure, but I'll wait until you explain it quickly
No,
because
so what I'm saying is, all right, let us use an example. If you are in receipt of, say, $3 million in pension, and you have other statutory income of $2 million, right? And let us just forget the threshold for a little bit, because you would get the threshold, well, no, let us not forget it. You would take the threshold, so that your total statutory income then would be $5 million. You would now deduct the threshold, which this year would be 1,650,090. And then the difference of that, you would apply the rate of tax to. But when you arrive at, say, that would be 3 point something million, and 25% of that would be about roughly $800,000. I'm saying that
total tax figure. What you would then do is subtract the tax that would have been paid on your pension income from that. So you're not being taxed twice.
where would I put
include
that
the
comes
pension income along with your other sources of income, you compute the tax, and then when you get that tax figure, you reduce it by the tax that has already been paid on the pension income. Is that any clearer?
No, not really, because when you say, all right, so after I've completed the form, put in my pension, etc., and I get enough a figure to pay this income tax of X or whatever, where do I deduct what I've paid already for the year for the pension?
So when Geneva gets to section F of the form, you will see it outlined clearly, because what you're going to see is the tax being computed. And after the tax is computed, we have what are called credits. And the credit is what will now reduce the amount of tax that you're actually going to be paying. So you include your taxes from your income from all sources in computing the tax liability. And then you reduce that amount by any tax that has already been paid in respect of any source of income that is included in what you use to compute the tax.
Right, because
but it will be made clearer, I guarantee, if after section F has been addressed and you still have questions, we will revisit this matter.
Okay.
Okay, are there any other questions? Alice? Winsome? How about Winsome? Winsome, you want to ask your question? Okay, how about Patricia? Patricia, go right ahead. All right. Jadia? Caron, how about Caron? Are you guys unable to? Okay,
Hearing me?
great. Yes, yes, we are hearing you.
Okay, I just want to know if this is being recorded and can we get an email of it? The presentation I'm talking.
The presentation is actually on YouTube,
Okay.
live. How about Patricia Pearce? Patricia, open your mic and ask the question, please. All right. I wanted to further point out that something about box 41, gross dividends from outside of the island. I wanted to point out that the tax on this income is based on the double taxation treaty if there is one between Jamaica and that other state. So the rate of tax applicable or who reserves the taxing right to this gross dividends is determined by the double taxation agreement that there is in agreement between Jamaica and that country if there is one. I just needed to point that part out. Okay. Now let's move into section C of the S04 return. Here we are focusing on the exemptions and franked income. And be careful to note that it did not include franked income as an exemption. It separated the exemptions from franked income. All right. Now, let's talk about pension exemption. This box, pension exemption and age exemption, is auto-populated. So you will not have to put in these boxes on the S04 return, the pension or the age exemption. This means that the pension exemption is auto-populated when you declare the pension income. So you will not be able to benefit from the pension exemption if you don't declare the pension income under the income sections of the income tax return, the S04 income tax return. Additionally, I did say that the NIS is where the return pulls from in determining if you are eligible for the age exemption. So again, you cannot get pension exemption if you don't declare the pension income which the exemption is given as a result of. And you must put in your correct NIS in order to benefit from the age exemption. So these two boxes are auto-populated. You do not need to put the information in here. Now let's move right along. Section D deals with deductions and statutory income. Now, I want to talk a little bit about box 4, NIS paid on income from self-employment. It is very important. If you are to get this NIS paid, as a reduction to your statutory income, you must actually pay it. It must have had been paid during the course of the previous year in order for you to get it at a credit at the end of the year when you are filing your S04 income tax return. This is where the importance of the estimated income tax return comes in, and the quarterly payments that you are required to make during the course of the year. So if the NIS is not paid, you cannot claim it as a credit. In fact, the return will not auto-populate this NIS portion if it was not paid during the course of the year. Let's talk a little bit about allowable loss. Now, we did say losses are carried forward indefinitely. However, there are some criteria that will determine the amount you are able to claim as a loss in any given year. The amount you're able to claim in any given year. I did explain that allowable losses are 50% of your statutory income is used to write off the allowable losses that you are carrying forward, that you are claiming rather within the current year. Another thing that is reduced to your statutory income is your contribution to your NIS, to any approved retirement scheme. So before you arrive at the tax payable, you are allowed to remove from it as a self-employed person the pension schemes you contribute towards. So if you are contributing to a pension scheme as a self-employed person, the amount you contribute for that given year is used or allowed as an allowable in reducing your statutory or chargeable income in arriving at the tax due or payable. These things are very, very important. And we move right into Section E of the income tax return. Again, this is our losses section, and it just breaks it out for you. But all of this, most of this, when we go through the walkthrough of the S04 return, you will see that most of it is actually auto-populated. Section F, computation of the income tax. From roll. All right. I want to point out here today that a change has been made to the S04 income tax return. Prior to 2024, the income tax threshold was embedded in box 3 of the income tax returns. But every time the threshold increases, we have to go through again to get it gazetted and to get it passed, and it takes a while. Therefore, the return was amended to allow for this box to be auto-populated. So whatever the threshold will be for the current year, it is auto-populated. We want to also emphasize that the threshold is taxed at the rate of 0. So the threshold is taxed at the rate of 0, and every other dollar that is below 6 million and above the threshold is what is actually taxed at 25%. So we have here a 3-tiered structure in relation to how the tax is calculated. So the income that is below the threshold is taxed at $0. At 0%, I'm sorry. The income that is above the threshold, but still below the 6 million, is taxed here in box 5 at the rate of 25%. And then every dollar above the 6 million is taxed at the rate of 30%. We know that interest is taxed at the rate, other than preference dividends, is taxed at the rate of 15%. So let's go again. The 3-tiered structure. Income at the threshold or below is taxed at 0%. Income above the threshold, but still below the $6 million, is taxed at the rate of 25%. Every dollar now above the 6 million is what is taxed at the rate of 30%. So I hope you get that. So again, threshold and below, taxed at 0. Above the threshold, but below 6 million, taxed at 25%. Above the 6 million, taxed at the rate of 30%. Now, we are talking about our credits, non-refundable credits. This is what Colleen was alluding to when she said, when you report the pension income, you are not going to be taxed twice because there is provision made on the S04 return for you to put in the tax that was withheld from you at source. So you would account for non-refundable credits first before we account for refundable credits. Now, some non-refundable credits would be the double taxation relief, contractors levy, employment tax credit, tax deducted on dividends here for, this is, what was the name of the young lady that spoke about the pension? Right here, tax from dividends other than preference dividends, other non-refundable credits, and you would attach the pension certificate in support of this to show for the tax that was withheld from source from your pension income. So we deal with non-refundable credits before we deal with the refundable credit. Total other non-refundable credits. Now, this is very, very important. It's the newest kid on the block. Investment in residual solar voltaic system. Let me talk a little bit about this right here now. So in addition to all your other non-refundable credits, and we did outline some of those, your employment tax credit is a non-refundable credit. So after you have dealt with your non-refundable credits, here we also have the investment in residual solar voltaic credit. This is the newest kid on the block that the government has brought out as an initiative to encourage our dependency on renewable energy. This credit is if you have purchased and installed a solar system at your place, your one place of residence, you are able to claim 30% of the total cost to you for both your acquiring and installing the system. So again, it is a 30% of the total cost to you for acquiring, purchasing, acquiring, getting it installed, getting the certificate from the certified electrical inspector. The total cost to you for the installation of this system in your home, you are allowed a 30% credit of the total cost to you. For the persons that are self-employed, it is not a refundable credit. For the persons that are employed, it is a refundable credit. Either way, both parties would need to fill up the schedule here, which we call the Schedule 9, in order to benefit whether by credit or by refund for this credit, this credit. All right. So the schedule is embedded in the return. The system was remodeled in order for you to incorporate the Schedule 9. So you would see the Schedule 9 in your SO4 return when you go on to file, and you would complete the Schedule 9 there as a self-employed person in order to claim this credit. So as you can see, it is still under non-refundable credit for the self-employed persons, but I'm just putting it in here that the employed persons will be required to file what we call the IT-05 return in order to claim this credit. Because I know that some of you here even though you're self-employed, you are also in an employment relation situation. If that is the case, where you have dual employment and self-employment, then you can only claim it on yourself as a self-employed person. So if you have both employment and self-employment income, please don't overload the IT-05. You will be required to file the S-04 where you declare all your sources of income, and here you'll only be able to claim it as a credit. Let's move right down now to our refundable credits. Refundable credits. For example, the PAYE that you pay in employment is a refundable credit. Why? Because you can actually apply to the Commissioner General, apply to Tax Administration Jamaica to get back in hand the taxes or that you would have paid more than you should have paid. So if you ended up paying more PAYE at the end of the day when this return is filed than should have been paid, you can actually take this return to the refund section and apply for a refund of the PAYE that was withheld at source from you. So that is why it is a refundable credit, because it can be returned to you. The tax deducted from distribution, excluding gross dividends and interest received, is also a refundable credit. So if you pay more, as in the case also of our friend on the platform, that if more was deducted from the pension plan than should have been at the end of the day, that credit is refundable to you. Let's look down now at the tax on dividends other than preference dividends received from companies resident in Jamaica for pensioners and persons age 65 and over. Now, the persons age 65 and over, the pension tax that you pay on your pension is actually given back to you as a credit. So in the S-04 return, when we are going to the walkthrough, you will see that the credit is taken out actually twice, because this credit, if you are over 65 years old, is given back to you. This tax is given back to you as a credit. And I hope I made that little part clear. Section G of our income tax, S-04 income tax return, and we are coming down. Pension, dividends, interest, and other distributions. If you are age 65, this type of investment is not subject to education tax. So pensions, dividends, interest, and other distribution is not subject to education tax. And for the employed person who is employed with 65 years and over and still earning employment income, it is not subject to education tax. Let me say it again. If you're in an employment situation, you're over 65 years of age, that income from employment is not subject to education tax. And so the return has made provision to back this out. And here brings us to Section H of the S-04 income tax return. That would tell you now the summation of all the taxes payable. So the return would have put together all the income, given you all the non-refundable, allowed you to take out your deductible expenses. It would have backed out all your refundable non-refundable credits and all your refundable credits, and then would give you a final summation of the taxes and contribution that you will be required to pay. So if you want to know after the return is completed, which part of the section, tell me now, finally, how much I must pay, finally, you will go straight to Section H. This is the section that will tell you how much, after all has been put in, after all that has been said and done, how much you are actually supposed to pay. It takes into consideration what is payable, what is paid, and what remains. So for those persons who would have taken advantage, again, of paying the quarterly payments during the course of the year, this is where in column B on this return is where you would see the record of all the quarterly payments that you would have made. So it would outline for you all that is payable all that you have actually paid and the balance that remains for you to pay. So this is the section that really defines for you what is actually payable. So again, I am plugging it in. Take advantage of the quarterly, making your quarterly payments as a self-employed person. I want to also add something for those of us that are interested in our NHT contribution, mortgage contribution benefit. Did you know that NHT uses your timeliness of payment in determining your eligibility? It means that you would have to be paying during the current year your quarterly taxes in order to be able to benefit from NHT in terms of a mortgage. So what does this do? The quarterly payments do is that it also, in addition to the mortgage benefit that NHT offers, it also provides you with a buffer. So at the end of the year, you would not have to be coming up with all of this lump sum payment. It would have served the purpose of being a buffer for you to having paid some of the taxes so that at the end of the year, you would only have that balance to face up to because you would have been dealing with it during the course of the year. Now, we are at the last section of the return. This is where the preparer's name is put there, or internally. When it says internally, it means that you as the individual, the owner of the return, who the return is being filed for, is actually completing this return. Externally means that, for example, if you have an accountant that is completing the return for you, this is where your accountant would declare under externally that they are the ones completing this return for you. So again, internally, if it is you are the person filing your own return and you're computing your own tax and declaring it on the return, you would fill out the section for internally. If it is your accountant or auditor that is completing the return, then they would fill up the section under externally. And I think that we are basically at the end of the return because the signature is done online. It is an automatic signature. You don't have to do any signing, any physical signing of the return here. It's electronically signed and dated. Now, we are going to take a little break here for a question to be addressed by our very own technical specialist, Miss Colleen Williams.
Okay, so it is
not just one question. I noticed some questions are being posed in the chat, especially about the photovoltaic credit. So if persons are so minded, would you just voice the questions and so that the 133 of us may benefit from the response? Photovoltaic credit. Patricia, go ahead.
Hi, I know the solar voltaic credit is going to take up quite a section. I have one little question. Apologies for not signing on before. I was having technical difficulties. Good morning, everybody. Quick question. The SO4A, I'm self-employed. The SO4A, you said that it has to be paid quarterly. Now, is this mandatory for the current year? Or can we choose to just file March 15th of the following year as per usual? Is the filing of the
requires in section 6
of the Income Tax Act, it requires that the payments be done quarterly.
Oh, it has to be done quarterly. Hello? Hello? I'm sorry, two people were talking on top of each other, so I didn't quite hear the answer clearly. Could you repeat that, please?
Okay, are you hearing me?
Yes, I'm hearing you.
Yes, I'm saying the quarterly payment is a legislative requirement under section 65 of the Income Tax Act.
Okay. So if
So it's
that,
not a matter of you having the option to do it or not to do it. It is a legislative requirement.
okay, so if I don't make that payment, say the one is that's coming up is March 17th, if I remember correctly, penalties and interest will be applied to that amount going forward?
The interest, not penalties, but any payment that is required by law, if it is paid late, there would be interest charges.
And this is for the current year.
Right, so you would have, so you're going to be required to make the declaration of the S04A.
Right.
And you're required to make the declaration and make the payment. The first payment is due on, well, this year will be March 7th.
I see. Okay, thank you very much. The solar folks have the floor. Thank you.
Okay.
Photovoltaic credits, we're taking questions on that. No questions?
Good morning.
Good morning.
All right, so asking about the solar, is that effective as of this year? Or when does
Effective as of 2023, year of assessment 2023.
2023?
So if you would have met the criteria for the credit and you would have installed and inspected and done everything, have your license from 2023, you may go back and amend your 2023 return. Or you may claim it on your 2024 return.
And when you say the license, is that the license to have the solar?
Right, so what happens is that as a self-generator, which is what you would be if you install a solar photovoltaic system at your primary place of residence, and you'd be a self-generator. Section 8 of the Electricity Act requires that you have a license, right, which you would apply to the Ministry of Science, Energy, Telecommunications and Transport, or that is not administered by TAJ. So you'll be required to apply for a license there. And that requirement is in place once
Are attached to JPS's grid. In addition to that, you're also required to have a compliance certificate. So you're required to have your installation assessed by a licensed electrical inspector. So those are two things that we find that persons tend not to be so clear about. You have the licensed electrical inspector certificate. That's one requirement. And you need to also have a license, which you would apply to the MSET for. Along with the other things like the property tax must be fully paid up, the acquisition and installation must be on or after January 1, 2030, and all of those.
I'm sorry, did you say 2030 or 13?
Pardon me?
I'm wondering if I misheard. Did you say 2013 or 30?
2023.
Okay.
Yes, I beg your pardon. It's 2023. Once you would have acquired or installed on or after January 1, 2023, I thank you very much for making that clarification, because it's not 2013.
Okay.
Yes. Any more
I have another
questions on?
question before I go. Sorry. You mentioned that you would need the license if you are on the JPS grid.
That's correct.
So you don't need it if you are not?
If you're not, then no. But once the JPS passes your gate, once the JPS polls and that passes your gate, then you should be on the grid. I think most of us are on the grid. It would be more like persons deep rural or some places where the JPS electricity is not available.
Okay.
Or the JPS system is not available. Those persons, if they do not have a net billing or a net wheeling arrangement with JPS, they would not necessarily need the license.
Okay. Just want to understand. Thank you.
You are most welcome. Lisan, go ahead.
Hello? Hello?
Yes, go ahead.
Can you hear me?
Yes, I'm hearing you.
Okay, I want to know if you haven't made any payments since the last return time, March last year. Do you have like payment plans if you don't have all the money to pay up everything?
Okay, so you would reach out to our compliance officers at the office closest to you and make that arrangement. However, I just wanted to bear in mind that notwithstanding the arrangement that is in place, the interest charges would still be accrued for the duration of time that the funds remain outstanding.
Okay, and can you specify like which one of them you want to pay if you are going to pay up something like pay up the NHT first and
Sure,
then
have that discussion with your compliance officer.
Okay, thank you very much.
Right. Go ahead, Caron.
Yes, I thought of another question. So if I just registered a business this month, when would my payments start or begin? Like, am I looking to make a payment or do a submission of application for this June coming up? Or is it next year, March?
Okay, so you are self-employed. I'm confirming you're self-employed.
Right, yes. So I just started.
You started trading this year.
Well,
what you would be required to do for
on
this
Saturday,
year
but yes.
is to make a declaration of your estimated income. So you would not be required to file the S04 for this year because you did not, the S04 that is due by March 15th of this year would be the one for 2024.
Okay.
And you were not trading in 2024. But the S04A for 2025. Yes.
So is it that I would do that for starting March of 2026? That's what I wanted.
No, so you would, what happens come March 2026, you would now be required to file the S04 for 2025,
right,
along with the estimate for 2026. Because the way you file, the filing is done, you're always in any year, you're filing the annual for the previous year and the estimated for the current year, as Ms. Allen would have explained earlier.
All right. So let me rephrase the question maybe. What would I need to do now during this year? Do I need to do anything for the rest of this year? That's the gist of the question.
Right, so the response again is it's your core is your estimated declaration that would be due.
Okay.
Okay.
And that would be done in June and then September and then
No, the
December?
declaration is made since you would have already started trading. The
Right.
declaration ought to be made by March 17th this year.
Okay.
And then you make your quarterly payments going forward.
Okay.
Have I answered the question?
Yes, so I need to do the declaration by March 17th. And then I am thinking I'd start quarterly payments come June of this year, right?
Right. But you can always reach out to your taxpayer education officers and they will provide further assistance to you.
And I would find them at the tax office, right?
Sure.
Okay, thank you.
You're welcome. Okay, Candice?
Yes, thank you. This is regarding the photovoltaic system. So you're saying
Yes.
for those that have grid tie, they require a license and a compliance certificate to be able to claim credits. However, what about the ones that have that grid tie, but as a backup, but they usually use the battery all the time? Do they still need the license?
Yes, you do.
Okay, thank you.
Okay, so we're going to, Miss Allen is now going to continue with the presentation, and to the extent that you have questions that you'd like to voice, at the end of the presentation, we'll take those.
Thank you, Colleen. Thank you, Mrs. Williams. All right. I wanted to point out this little part of the return that we tend to ignore. When we are filing the return online, it serves as a pop-up. It's section K, declaration to be signed by the taxpayers only. Note, any false statement made herein will render you liable to penalties and/or criminal proceedings. Please, this is really asking you. Declare the truth on the income tax return. Tax Administration Jamaica is only asking you to pay your fair share, no more and no less. And that is why so many incentives as it relates to the credits are being given. Capital allowance is one other credit that I failed to talk about here. But capital allowance is you claiming back the cost to you of those assets that you would have used in the business over the deemed life of the asset, because every asset is given a deemed life. So it is very important that you declare the right income, you declare the business-related expenses, you claim those business-related expenses as a deductible. You also are allowed to claim all the credits, the non-refundable credits, you claim them first, and then you are allowed to claim the refundable credits to you. Capital allowance is a non-refundable credit. Employment tax credit is a non-refundable credit. The solar voltaic credit is also a non-refundable credit. And I wanted to point out here that it is 30% of the total cost to purchase and install the system, or $1.2 million. I wanted to point that out. So in summary, you declare what is true and what is right, and take advantage of all that the legislation and all that the Commissioner General says is available to you in reducing the tax that is payable to TAJ at the end of the year. We want you to pay your fair share, nothing more and nothing less. So here ends the flow of the S04 income tax returns. let us go right into talking a little bit about mandatory e-filing requirements. Now, we know or should know by now that it is mandatory for all returns to be submitted online. So any person filing an income tax return, it must be submitted online. Online does not mean filling up the form and putting it into a web message and submitting it to TAJ. No, that is not online. You must go into the return that is embedded on your e-service platform and submit the S04 income tax return. To file online, each person will be required to register for e-services. Now, there are some different approaches to register for e-services. E-service registration can be done inline or in person. You can actually get the form. You can either download the form or stop at the tax office nearest to you, complete the form, and attach your ID along with the application form, and you may submit it at the taxpayer service section or the taxpayer education section in order to be registered for e-services. You can also register for e-services online. You go to the online platform, you create the username for yourself on the online platform, and then you submit the link from there to be registered for e-services. Of course, you will have to upload, in this case, the ID of the person who is being registered. Now, there are some little things that you need to take note of. For example, if you are the person being registered and you are, however, assigning another person to be your accounts manager or your authorized officer, then you are going to need to submit an authorization letter stating that you are appointing this person as the accounts manager or the authorized officer. So you would have to put that in writing and attach the ID of that accounts manager or authorized officer. So again, e-filing registration, manually, inline, in office, carry the form, fill it up, then submit your ID. Online, you go there, create the username, select the link to be registered for e-service, upload your ID, and if you are assigning someone other than yourself to be the accounts manager or the authorized officer, you will have to also upload the ID of that person and the authorization letter with you stating that you are now appointing this other person to be your accounts manager or your authorized officer. So you visit our website, Jamaica Tax, www.jamaicatax.gov.jm to register for e-services. There will be a link there after you've created the username that says apply for an e-service account. You would select that link and it will take you directly into the registration process. Now, online, when you are registering for e-services, it is going to ask you for some questions. Answer those questions to the best of your ability. We are currently in the process of changing out some of those questions, but don't let them deter you or cause you to feel stuck in the process when you're not able to answer one of them successfully, or you don't have an answer to the question that you see there. Answer it to the best of your knowledge and ability and move right along and submit what is necessary and required for the process to be successful. I put it in right here for the 133 persons that are on the platform. And this is only extended to you. If you want, you can also complete the application form, complete it, sign it, and attach your ID, and you can send it to our email. You'll see our email at the end of the presentation. You can scan it and email it to us. And just for you, just for being here, we will personally do the registration for you, and you don't have to come into office if you are kind of not so certain about doing it online for yourself. So let me throw it out again. For the members of the platform that are here, all of you that are here, if you are not registered for e-services, you can actually download the form, fill it up, scan and email it to us along with your ID. You will see our email at the end of the presentation, and we will do the registration for you. All right. Now, we are going to be taking a little break, a 15 minutes break. And in the 15 minutes break, we are going to give you 10 minutes break. I'm sorry. We are going to give you a word. And from that word, you are going to be required to find the most words that you can create from that word. The person who gets all the words that can come from that word will get a prize. Now, I will know the maximum word that you can get from the prize. So if nobody gets the maximum word, then the maximum amount of words that you have to get, then I will take home the prize. So you want to make sure that you try your best to get all the words that you can get from this one word. And then we will be giving the person who gets the most words from the one word a prize. Now, let us take our 10 minutes break. See you back in 10 minutes.
So even though I would have said that yes, there is, it has not been done. Yeah. Right.
Welcome back. Welcome back. Now, I also did my little homework. And I got the most words I got from the word was 7 words. I got deduction, conduct, induct, notice, cut down, notice, induct, untied, counted, docent. But you have some people on the platform that better than me. You have Kaiko Tofig, Jada, Sharon, Nakia, Colleen, Makeda. Oh no, go on with yourself. But the one that is taking on the crown today, drum roll. We're going to call him through at this time. The winner of the TJ package and prize goes to. Pick up yourself on. Brilliant. I got 100 words to come up with in my girl, and where get so much work from? We're simply the calling. You're gonna go something. Girl, I come to you. Listen, nearly 100 word calling. Come through with posted enough. You deserve the prize, Carleen. You deserve it. Come on, put up some cheers and some clap in the chat for Carleen Ferguson, the winner of our prize today. All right. And so, now that we have crowned Carleen Ferguson the winner, we are going to go straight into the demonstration of our online filing process. But in our break, we had a little discussion and we wanted to make 2 things abundantly clear. One is that it's the gross preference dividends that is taxable at the rate of tax applicable in the hand of the applicable to the individual. So again, the gross preference dividends is the rate of tax applied to it is the same rate of tax applicable to the individual. Gross preference dividends. And I gave you the example of the income earning. If it is above 6 million, then it's 30%. And I did go through the little examples. The other thing I want to briefly point out is also that gross dividends from overseas, that this now, the rate of tax applicable is dictated by the double taxation agreement that is in place. If there is no agreement, then it follows our rate of tax here in Jamaica, all right? The third thing I wanted to point out was that the quarterly payments made from the S04A, legislatively, the interest is to be applied. But right now in our system, that mechanism has not yet been activated. So there is no interest being calculated now on your estimated payments that you make during the current year for the current year. Legislatively, it is required, but we have not activated that function in RAISE. So those 3 things I just wanted to briefly point out. All right. So let's move full speed ahead into the demonstration of our online filing process. Now, what is this? We know that when you log into the portal, when you log into the tax portal, you are required to have a username and a password. So when you are registered for e-services, you go to the top right, there is going to be the word there that says login. You take the username and password that you have created, you go to login, put in a username, put in your password, and this here is the page that would greet you. So now we're going to be walking through the process with you because we want you to be confident in going online to submit your S04 return. We want you to be the boss over this thing. All right. So when you log in, this is basically what you will see. This is the face of the screen, this is what is going to be on the face of your screen. Well, providing that you are using a computer, a laptop or a tablet, this is going to be the face of your screen. If you're using the phone and not the mobile app, it is going to look a little different. But where you may have to like scroll down to see some things or scroll over to the side in order to see the different tabs. But basically, for the most part, this is going to be the screen you see when you log in online. Now, what we wanted to pay careful attention to is this little orange indicator anywhere on the platform or on the return, where you will see an orange or red indicator or radio button. It means that you must pay careful attention to these areas on the platform, because these areas are the radio buttons and the exclamation things in the orange and the red. They are there to guide and to assist you in submitting an accurate return. So don't be afraid of them when you see them. Just get it in your head that this thing here needs my attention. All right. So in filing your S04, when you've logged online, to find the S04 return, you would go to the income tax account type that will have that little exclamation sign, You would now select the income tax link, and this is the next page that will be facing you. Because we are dealing with 2024 income tax return, of course, you will select the file return option that I've circled there that is across from the December 2024 period. So you would select the file return again with the exclamation sign in orange. You would select that file return link. And it will take you further into getting to the return. Then you will now select the File Now option that would be on your left across from the return type that you are going to be filing, which is the S04. So you would select the File Now option, and it will take you further right into the S04 return. Now remember, we talked about the importance of your NIS reference number. So you need to have it on hand because this is where you are going to be inputting the NIS reference number. You will also need to answer the radar button question, is it your first time filing? If it is your first time filing and you say yes, you won't get any resistance from the return. But if you have already filed an income tax return and you say yes, that radar button that you have selected is going to turn red because it's going to check in the back office with what really is your reality. And then it is going to tell you, say, oh no, something is going on here. There is already a return existing for you. So when you see the radar button turns red, you'll know that I have answered the wrong question, and I need to say, no, this is not my first time submitting an income tax return. If you don't do that, you won't be able to go any further. And then this is where the calls are going to come in. I am unable to go further because the system is not allowing me to go further. No, it is because you have selected the wrong radio box. All right. Now, the next step is this your first time filing? I've answered that. Indicating the filing period. Now, this is a little tricky because there's a drop box that comes up that allows you to put in the date. It is the beginning of the year that goes in the first box and the ending of the year that goes in the next box. So your filing period is different from your accounting period. If it is different, then you would have a different date within the accounting period. But for the filing period, it is always going to be the 1st of January, 2024. And for the end, it is going to be the 31st of December, 2024. If you did not write to the technical specialist unit to get your accounting period approved, then the filing period and the accounting period is going to be the same thing. It's going to be January 1, 2024 to December 31st, 2024. Again, highlighted here are all the radio buttons that you must answer. You must pay attention to the radio buttons. Anywhere on the return you see red or orange or exclamation sign, give it your attention. Are you a resident of Jamaica? Remember, we talked about that when we were going through the legislative requirements and stuff. You must answer this question here. If you're a resident, you say yes. If you're a non-resident, you say no. Have you commenced trading? We talked about that. You select yes. And if you say yes, then you are going to have to put in a start date of trade. If you would say no, you have not begun trading, and this is for persons who are submitting a nil return, it's the only way you would really say no, I have not begun trading. If it's just a nil S04 that you will be submitting because you have not actually started trading. You're just submitting the return to declare to the Commissioner General that I have not traded for the period. So that is the only person who would be saying no to trade right here. The persons who have not traded for the entire period. All the other persons will say yes, and you will have to put right in the section that says start date of trade, you'll have to put the date you started trading. Are you gainfully occupied in Jamaica? Are you gainfully employed in Jamaica? You must answer this. So for the self-employed person, you would say yes to gainfully occupied. If you are also in receipt of employment income, you would also say yes to gainful employment. But if you only have income from trade, then you would be gainfully employed, yes, and you would not at all be gainfully employed in Jamaica if you have no employment income. The financial accounts were prepared by internally and externally. You have to answer those questions. If it is internally, it means you are the one completing your own return. If it is externally, it means that an accountant or an auditor, you acquired their services to put together your income and expenses, and therefore they must take some measure of responsibility to declare that they are the ones who have done that. All right, moving right along. So here you'll see I have populated it, that section, putting in the date, putting in the accounting period, answered all of the right rated buttons. In this case, this person does not have employment income. And I further demonstrated here the section where you answer the question, be it internally or externally completed. Now we're into the return where we are required to declare the income and the business income, the income that the individual has earned. Now, in order for you to populate the boxes, to put in where you see I have 9 million there, you are not allowed to just go to the box and type the figure in. And I have had persons calling to say they're not able to put the figure in the box. That is because in order to populate box 1 to 9, wherever there is a hyperlink at the number, you have to select the hyperlink in order to populate the box. So you'll not be able to just go to the box. Once over on your left, you see it highlighted in blue. You see that if you notice the highlighted sections there are the ones where the hyperlink is embedded in the return, and in order to populate the box, you will have to select the hyperlink. So for example, to populate box 1, gross receipt, sales, income, I cannot just go to the box because it is highlighted there in blue. I will have to select the hyperlink in order to populate the box, to put in my $9 million, which is what I have there. The same for the cost of goods sold. But if you look at box 3, you'll realize it's kind of grayed out. It means that a hyperlink is not existing at that number, and you can actually, it will auto-populate, or you can actually put figures in there. In this case, it will auto-populate. You're not allowed. The box will auto-populate. Let us go further down to, let us say, growth, rental from land, house, and property. Remember, when you select this, it brings up the schedule for you to put in the rental income and the rental expense. So again, any part of the return going forward that you see the highlight on it is highlighted across from the box where you are to put the figure. Know that you have to go through the hyperlink in order to populate the box. Okay, let's move right along. I wanted to say something here also. There is this little radio box over on the right. If you see it, it says attach schedule supporting documents. But above that, it says in red, if gross receipt, sales income exceeds $10 million, please check the box at line 1 to complete return and attach financial statements. But listen, if gross receipts, sales income do not exceed 10 million, click on the hyperlink at line 1 and complete the schedule. Now let me say it in layman terms. So if the income is above $10 million, you don't need to uncheck the box that you see there on the right. If the income is below the 10 million, then you need to, that is when you need to uncheck the box. So when you click on the hyperlink, the gross income hyperlink, this is what the schedule that it brings up where you can account for. You put in the income, the gross income, your purchases, if there is any, and it calculates everything for you that will feed over into the return. So income from employment and offices. Again, if I am to populate the box, I have to select the hyperlink because you notice all of them there is in highlighted blue. So they tell you to get to the box, click me, click me. That's what this basically say. All right. So you would put in your income from employment from section number 12 right down to box 16, 18, 19. All of this is in relation to income from employment. It takes in consideration at box 20 the superannuation that you would have paid at employment. Now, I want you to take careful note of box 25. If you have domestic in domestic employment or embassies employment, there is a special box there for you to put that income. So if it's domestic employment, and I want to go back to the beginning because the radio buttons you select there will determine something here. Let me just go back quickly for you. So if I am a domestic worker, I am not going to answer yes to the question if I have income from trade. I am going to say no. If I am an embassy worker or I work with the UN, the answer to the question, do you have income from employment and trade, trade is going to be no. This radio box is going to be no. Have you commenced trading? No. If I'm an embassy worker or a domestic worker, are you gainfully occupied in Jamaica? The answer should be yes. In addition, are you gainfully employed in Jamaica? The answer here should be yes, because you are in domestic employment or you are in your employment is with an embassy. I just wanted to emphasize that right there. Let me go back to where I was. Right. So there's a special box for the income that is domestic and for embassies. And remember why it is important to put the income in the right box on the S04 return, in the right category. Put the income in the right category because we want to ensure that the right rate of tax is applicable to you. So under the domestic employment, what happens is that NIS, domestic workers, will only pay the minimum NIS of $13,000. They will not pay NIS at the rate of 6%. Embassy workers will pay NIS at the rate of 3%. They will not pay the rate of 6% as with the general self-employed person. So these persons must be careful to put the income into the correct category. Now, we did talk about having pension income in order for you to claim the pension exemption. This box at 28, the pension income, investments from overseas, pension, if your pension is coming from overseas, this is where you need to put it. All right? Now, let me move further down. Gross preference dividends other than preference dividends, and this is pointing out now, just like we did in the slides earlier, the different areas on the return where you need to put these different categories of dividends, because we want to ensure that the right rate of tax is applicable, is applied. So you have to ensure that you put the type of dividends in the right place on the income tax return. All right. Now, these again are hyperlinks. When you click on gross preference dividends, it will take you into the schedule that will allow you to further place the gross preference dividends. It will provide you a schedule and you will need to populate that schedule. The same for gross dividends other than preference dividends from companies resident in Jamaica. It is another schedule that you would have to complete. And again, I cannot overemphasize that the reason why they are separated on the SO4 is because we want to ensure that the right rate of tax is applied to the type of preference dividends that you actually have. All right? Now, income from sources outside of the island. It is important, if this income is from outside of the island, that you declare it here, because you want to be able to benefit from the double taxation agreement that may be in place with the country that these income from outside the island are issued, right? So for the double taxation agreement, in taking advantage of it, there is a section on the income tax return that will calculate for you to get the benefit of not being taxed twice for the income. So you must put the income in when it is from overseas, so that the double taxation treaty agreement that is in place, you can take full advantage of it. And it will result at the end of the day in you not having the tax to pay twice. All right? Or the applicable rate of tax is added to it, or who reserved the taxing right, the double taxation treaty will dictate that, and how, as a result, the income is to be treated as far as how much you are taxed, or if at all you are to be taxed again. All right? Now, moving right down, I want us to go right down to non-executive director's fee. Now, I want to go back to the beginning of the return. If you only have non-executive director's fee, what would be the answer to the question at the top that asks if you are gainfully occupied in Jamaica? Recently, I hope he's not on the platform. Recently, I was talking to a gentleman. He's an accountant, and we were going through, he's submitting returns, and we were going through. And he said, I'm not going to select gainfully occupied. I'm not going to answer the question gainfully occupied, because this non-executive director, him don't do nothing to get it. Him just go to meeting, and that's all him do. So he's not gainfully occupied in Jamaica. Of course, I had to take him to task and say, I said to him, did the gentleman at any time take up his body, go in his car, and drive to go to those meetings? Yes, ma'am. Did the gentleman at any point in time have to stir his brains to come up with suggestions, questions, and answers in order to enhance the business? Yes, ma'am. So I said to him, then he is gainful. He did something, for at least he took up his body, put it in the car, and took it to the meeting. I am saying, non-executive director's fee. Yes, of course. You're still gainfully occupied in Jamaica. There are some people too, in relation to the rental income, that will say, I am not gainfully occupied in Jamaica because I only get rental income. I don't do nothing. I just collect the money. Well, there are types of rental agreements. And in the case where all they do is just collect the rental income. They're not responsible for fixing anything. They're not responsible for, all they do is collect the rent. Then we can consider it to be passive. But if it is that person who is the landlord, you still have to fix the roof, fix the door. If something pop down, they're going to call you. They're going to come and look for you. Mrs. T, the land broke. Oh my God, Mrs. T will have to run, come and go and buy the boat and fix it. In that case, the rental income is not passive anymore. It's not passive income anymore. So you must select that you are gainfully occupied in Jamaica, and that is not passive income anymore. I just wanted to put that little plug in. Now, let us finish the return talking about the non-executive director's fee. If you select that it is not gainfully occupied, you know what will happen? You are going to be robbing the government of the education tax applicable. But if you select that it is gainfully occupied, then it will calculate for you the education tax. Now, I'm saying this to say that it is important that you answer the radar buttons correctly, because they will determine not just the rate of tax applicable, but sometimes, in some cases, the tax that is applicable to you, whether education tax is applicable or not, and also the rate of tax that is applicable to you. I just wanted to plug that in. All right, moving right along. Right. Income from investment, franked income, unfranked income. Remember that we said it is unfranked when it is taxable or the tax is borne by the recipient. It is unfranked. And it is franked when the tax is not borne by the recipient. It is borne by another party. You must be careful again to select the hyperlink here, and then another beautiful schedule is going to come up to you, and you are going to have to look down the rows to see where must I truly place this income. And you have to take the time to do it, and it has been broadened and expanded so that the right rate of tax is applicable to you right here. All right? Moving right along. Now we're at exemptions, deductions, statutory income, and available losses. Section C deals with exemptions and franked income. Now, we did say if these boxes here in relation to pension exemption and age exemption, that they are what? Auto-populated. So, if you want the pension exemption, you will have to be careful to declare the pension income, because you cannot get the exemption if you don't declare the income. So you will, if you come around here and you say, but may I get pension, and I don't see the money populated here, the $207,050, I don't see it populated here. Why TJ don't give me, I'm getting receipt of pension? Look no further but to yourself. You have not included the income in the pension section of the return. And the age exemption now. You must be careful to put in the NIS so that the age exemption, you can benefit from it here. Now, I know one place that ladies are not afraid to tell their ages, their true age, and it's when they are filing the S04 income tax return. And if I was over 65, I'd be glad to declare it. Yes, because I want the benefit of the age exemption. So, ladies over 65, step right up, don't be shy, put in your and claim your age exemption, because listen, it is not illegal to avoid the tax, you know. What is illegal is to evade it. And if putting in your age exemption, your correct age is going to cause you to get a reduction in your statutory income, come by no means take advantage of it, because what TJ is saying, we want you to pay your fair share, no more and no less. So take everything that you can get to reduce the tax due and the tax payable. Take every single thing. Take advantage of every benefit. Listen, if you want help, we have the education unit. We have the START program going right up until March 17. So if you don't know how to take everything, put your income and expense together and walk yourself up to any one of our revenue service center island-wide. There will be the STOP program is going on, and we will help you to take everything that the government is giving you, is allowing as a deductible in you arriving at your statutory income. All right. Let's talk a little bit about capital allowance. Now, remember, we talked about the credits that are non-refundable and the credits that are refundable. Capital allowance is one of those non-refundable credits that you are allowed to claim in arriving at your chargeable income. What is capital allowance? Like I said earlier, but I said it not very broadly, but capital allowance is the government wants you to recover the cost to you of the assets that you have used in the business during the current year or during the year of filing to actually earn the income. Let me give you some examples. If you are a sales representative and you drive your own personal motor vehicle, you know, to go get the work done, you're jumping in your car more than all you're jumping in, go cream your ear, or go braid it, or go do your toenail, or go to the date. More than you do those things, you jump in the car to go earn the income. So why shouldn't you then be allowed to claim all the expenses that you incur in the wear and tear of the vehicle? My God, and the insurance and the registration and the fitness. In when you drive and drop in a pothole in some of the roads that we have there, you know, some of the potholes there, if you're dropping it, you can't come out. But I'm just saying, you drop in the pothole and you have to service the vehicle. All the cost you have incurred in this motor vehicle, you are able to claim. If it is a private motor vehicle, it must be a portion based on usage. Come now, when we talk about fair, truthful, honest, you must apportion the cost to you based on usage, and you claim some motor vehicle expenses. The cost to you for acquiring the vehicle now is what the capital allowance that you're allowed to claim on the cost to you for the vehicle. Now, the vehicle is given a deemed life. I think it's 8 years for private motor vehicles. And you are given, and you are allowed to claim the annual allowance on this motor vehicle. The full amount of the cost to you for the motor vehicle, you are able to write off over the deemed life of the asset. But you must apportion the capital allowance based on usage. So if when you work out the full cost for the first year, it comes to 400,000. Then the same apportionment that you will apply to the motor vehicle expenses, you will also apply to the capital allowance. And that is what you would put in the return as the credit you are claiming against your chargeable income. That's it for capital allowance. Let's talk a little bit about covenanted donations. Now, covenanted donations is a legally binding agreement between you and UTech UE, but I think, if I'm not mistaken, some leniency was extended to include some other education schools, some other schools. What you must focus on is that this binding agreement must be for 5 years. 1, 2, 3, 4, 5 years. You must have entered into this agreement that for 5 years, I am going to pay the University of Technology or the University of West Indies 100,000. Whether or not I make a profit, I am going to give them this 100,000. Now, the agreement must be for 5 years. So, if you give year 1, and year 2, you give again, and then year 3, must give again. And then, let it be, make it emphatically clear. If you don't continue for the entire 5 years, you're going to have to put back the monies that you took as a deduction for the first 2 years. That is why you must know, if you're going into this agreement, the only reason why you get it as a deductible, as a deductible expense or a credit is because of the responsibility you have taken on to say, I'm going to do this for 5 years. I'm going to pay the money over for 5 years. and it is legally binding. You cannot withdraw from it. And as a result of the responsibility and the legality of this donation, it is the only donation that you can claim without making a profit. Now, there is other donations, and the other donations, the only way you can claim it is if you give this donation to registered charitable organization. Please, never gonna don't ask me about if your tithes is a deduction. I don't want to go there. I don't want to go there. But I am saying your donation that is deductible is the one that you give to the registered charitable organization as other donations. What you need to know, however, here with other donation is that you cannot, by no means, before man, use this donation to increase your loss. Therefore, you cannot claim other donations if you make a loss. But the covenanted donation now, because do or die, whether or not you make a profit, you will have to pay it over. It is allowed, whether or not you make a profit. But the other donations, not so. It must be given to a charitable organization. You cannot use it to increase your loss. So in the year where you make a loss, you cannot claim it as a credit. All right. Let me talk a little bit about the approved contribution to the approved retirement scheme. We know that, or should know that, or I'm telling you now. If you contribute as a self-employed person to an approved contribution retirement scheme, then your contribution can be claimed here also as a reduction to your chargeable or statutory income. All right, but again, it must be to the approved. Everything in TAJ, approved. It must be approved. All right, approved, 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 approved. Okay, now let us talk a little bit again about available losses. We did touch it, but I want to re-emphasize right here because sometimes folks get it kind of twisted, you know? So remember, this is what you have to remember because this year we are kick out S04 return teeth. I am saying, get it in your head clearly that what is used to write off the loss is 50% of your statutory or chargeable income. So 50% of the income used to write off some of the loss. So it's not loss that determines it. It is the income you have, the statutory income or the chargeable income. 50% of it is used to write off prior year loss for those entities that are over the 6 years old marker and that have income of more than $10 million. So if my statutory income is $100, my loss $150. Only $50 from my statutory or chargeable income can be used to write off my $150 loss. The other $50 remaining up on the statutory income will be taxed, is what you'll pay the tax on. So what is the government trying to achieve here? Prior to this, we had some very smart intellectual people who would have every year losses that would write off completely the income, and therefore the government gets nothing. No taxes paid over. So it was amended, the legislation was amended. So the government said, you get some benefit, but I also get some tax. And that is only fair if you should ask me. You get some of the loss written off, get some of the tax. You get loss, I get tax. Yes, because at the end of the day, tax is what causes country to run. Yes, tax is used to give us the roads as we may have something to say. But imagine if there was no tax at all being paid. There'd be no road, there'd be no society, no policemen, no nurses, no man coming at the garbage to collect your garbage. None of those things would have happened. We wouldn't have a society. So we must pay our fair share, no more and no less. So that is it for losses, and losses is carried forward indefinitely. So every year you carry forward until the loss is totally and completely recovered. All right. Now, we did talk about some other credits, which we call the employment tax credit and all of those things, they are used further to reduce the tax that you will have to pay. I wanted to add that. Now, we wanted to touch again on this, the newest kid on the block, box 18. So we highlighted it. Investment in residual solar photovoltaic system. And the schedule, this is where you would click on in the S04 return to get the schedule that you will have to complete in order to benefit from the credit. Again, it is 30% of the cost to you for the installation, the cost and installation of the system. 30% or $1.2 million. You must complete the form. And we had a gentleman yesterday, and I'm just saying this so that we can all be good and successful at completing the return. What happened for him was that he installed the system, but his certification, the licensed electrical inspection was not done until 2025. So the date on his certificate is dated 2025. This means that when he was completing the form, the schedule, there's a section on it that asks you for that date. And because the date of his inspection was done in 2025, he cannot claim the credit in 2024. He will have to wait until 2025 where he will be able to claim it. Because remember now, it's the cost to install, it's the cost to do everything. So if everything was not done in 2024, then you cannot claim the credit in 2024. The date on the certificate when his inspection was done is 2025. So then he will have to wait until 2025 in order to claim that credit. But the reverse happens. Let us say in 2023, you got it installed. After January 1, 2023, it was installed. You got your electrical inspection done. You're connected to the grid, so you got your MSET license. All of that was done in 2023, but you had already filed your 2023 return. You are allowed to go back and amend your 2023 S04 and claim that credit. Talk the truth, you don't think that's fair? Me think said fair, even if you're not answering or agreeing with me. All right. Let us move right down. Now, I wanted to point out here, just for these persons who would do businesses with withholding tax entities who will withhold that 3% specified service or the 25% miscellaneous. Here on the return, there is a section provided for you to put the 3% tax that was withheld, because now it is going to be given back to you as a credit to reduce the total tax you are eligible to pay. And it is the same thing for the pension income, where you're required to declare the pension and you know it is already taxed, but the tax that was withheld from you at source will go back into the return at another place to reduce your chargeable or your tax amount by the same credit. So you are not being taxed twice. It's just the only thing that is happening is that because it is legislatively required that all your income from all sources be put into one. And I told you the reason why, because each individual is entitled to the income tax threshold only once. You cannot get it more than once. So you can't get it at pension and get it at employment and then get it again as a self-employed person. That is the beauty of the S04. It allows for the amalgamation of all the income from all sources. And then it applies one income tax threshold to the entire source of income and allow you now to claim the credits that are non-refundable, like the ETC and the capital allowance. And then it allows you to claim the credits that are refundable that you would want to use to reduce at the end of the day the tax that is eligible for you that you are eligible to pay. So that is generally the flow of the S04. And if you get that clear in your head, then it becomes easier for you in the gathering of your documentations and all that would be necessary in completing an accurate return. So here is where other refundable credits at box 29 is where, like our friend on the platform who spoke about the pension income, and he said it's taxed already. The tax that was withheld from you, you would put it in box 29 on the S04 income tax return, because it is going to be given back to you to reduce the tax that you're going to pay. So you're not at all paying the tax twice by declaring the income on the S04 income tax return. All right. Now, this is the general section, the section A of the income tax return. Again, the schedule is to be completed by self-employed persons or individuals who have acquired and installed the system. This is showing you what the schedule, the solar voltaic schedule is going to look like. And you will have to populate it and answer the questions correctly. And this is what the gentleman was having the problem with, because it asked him for the date of the certificate that the electrical inspector gave to him. And it was in 2025. So he could not go any further on the return. So he called in to say, I'm stuck, I'm unable to go because of the date. Please, I am asking you, please, do not suggest, like one person did, to change the date of the certificate. You remember now, you will have to upload all documentations in order to claim the credit. So please do not even consider it. Just wait until 2025. You file and claim the credit at the right time. So this is just a synopsis, a screenshot of the schedule that you'll be required to populate in order to claim the solar photovoltaic credit. Section G, computation of the education tax. Remember that we said employment income, and this is that section that a lot of persons we find overlook because probably we don't know. But please get it clearly now. If you are employed and still in employment after the age of 65, you need to put back the income here, the statutory income, the income earned from employment after the NIS is taken out, if there is any. Put it back here in this box under section G so that the income will be exempt from being taxed or will not be taxed for education. Will not be charged education tax. And again, persons this is in relation to employment income over the age of 65. You have to put it back here because we don't want you to pay the education tax on that type of income. So take a note of it because we see it quite often where persons do not put back the income there and then everything is taxed. This income is included in the calculation of the education tax. Now this is the schedules, and this, when we hear schedules A and Schedule B, we are now considering our partners, our partnership with NHT, our partnership with NIS office. These schedules are very important, and the radar buttons are there also to guide you just the same in the right computation of your NIS and your NHT. So you must answer the question, the radar boxes correctly. Now, are you a domestic worker? If you are a domestic worker, remember, you have to say yes here because, again, if you don't select the right radar button, it will affect the computation of the tax or the calculation of the tax, and you may very well not be able to go further into the return. Because if you select that you're a domestic worker here, but you did not put the income in the box provided for domestic employment, then what is going to happen? You are going to be stuck because it is going to be saying, yes, you said yes to a domestic worker, but the box that should reflect the income for domestic employment is empty. You would have to go back Take it from where you have placed it and put it into the category or the box provided for domestic employment. So the radar buttons, again, I say, they are here to help you along the way in submitting an accurate S04 income tax return. So if you're a domestic worker, you should say yes, because you would have already put in the domestic income in the right box, and then it will allow for the right calculation of the NIS for you here, because domestic workers or persons who are domestically employed, they only pay the minimum NIS of $13,000. Are you a Jamaican citizen employed by an embassy, high commission, consulate, United Nations agency located in Jamaica? Again, yes, if you have computed the right box, because again, it applies the correct rate of tax to you. Do you have income from self? No. I have had the experience where persons did not select income from self here. They did everything right at the front, but they didn't select income from self here. And then they see that the computation of the NHT and the education tax is missing from the return. This is important for you. You must select the correct radio box here. Yes, because if your income is from trade, you have income from trade at the beginning of the return, then you must say yes to the income from self-employment here. Schedule, moving on to Schedule B, same way. Schedule B, were you employed during the year? If you have had employment income around the front, then you must say yes, because there is a schedule here that you will have to populate, and this will calculate the amount of NIS that you will actually have to pay. If you don't select the schedule, then you are going to be paying the NIS twice, because it is going to be calculating both the employee and the employer's portion for you here. So you must populate the schedule if you have employment income and put in it the NIS that was actually paid. Are you a Jamaican citizen? It's the same thing for Schedule A. It's the same thing repeated for Schedule B. Do you have income from self? You say yes, because you want the right rate of tax to be calculated. Now, NIS paid from the stamp card. This is for the persons who are domestic employed persons who did not formally pay their NIS on the S04, through the S04 or at the tax office. These persons went directly to NIS office and they contributed via the stamp card, where you buy the stamp for each contribution you make until the card is full. Then the contribution that was made prior, you would put it here. But as more people are getting involved in this and more domestic workers are getting into the know, then we know that you no longer pay via the stamp card. You come and you file your return as a domestic worker and pay the NIS through tax admin or through Tax Administration Jamaica on behalf of for NIS. During the year of assessment, did you conduct or transact any transaction with an affiliated company or connected persons? Now, I know most self-employed person, when they reach right here, they said no. Even if them sell some goods to them sister or them relative or them brother or them friend, connected party, they say no right here. But the reality is, the intent is, as a self-employed person, if you really sold or did business with any person that was not at arm's length, or a family member, you bought things from them or you sold things to them, you are in fact supposed to declare it here. That is the purpose here. So it's not just companies that have this question to deal with. Self-employed persons have this question to deal with. So if you sell goods to your sister, relative, auntie, uncle, husband, wife, children, as long as the person is connected to you in any way, you have to complete the schedule here. If you did not do business with any connected party, then that is the only time you should say no here. But we want you to get it in your understanding that this also includes when you do business with as an individual, with family members or persons who are connected to you, you should also complete the schedule here. Then finally, you are required here to attach your documentations and the proof that will support all you have declared on the income tax return. All you have declared on your S04, you should be careful to attach the proof here. Now, this button that is highlighted that says, I choose to submit my files at a later date is really provided for those persons who the filing deadline is coming down, but there are some things that you need proof, you are awaiting the proof from some other organization to give to you. You can submit the S04 return just the same and select this box to say, I choose to submit my files at a later date. Once you have gotten these documentations, you need to go back and amend the return and attach them and submit the return. In this case, you would do a letter of amendment to say, return is being amended for proof of income that was previously not attached to the return. And you submit the return, the amended return, with the proof that you've now attached and the letter of amendment. I think I'm done. Right. And so I want to know if there are any question and answers. If there are any question and answers, is there any question? Is there any question to anything I've said? Is there something you want me to say over? You want me to go back to a slide? If you have any questions at all, remember, panelists are here. We are here to support you, to respond to you. So step right up. Don't be shy. Open your mics, ask the questions, put them in the chat room, ask the questions, because we want this year. If all the other years you were afraid, not so comfortable, not so confident about submitting your S04, we want you to be on top of your game for this filing period. So ask your questions away. So go right ahead now and let's hear what you have to ask us. No questions? No questions? Okay. Trisha Pearce?
Hi there. Thank you for a very informative
Trisha?
presentation. I'll be listening to it again on YouTube. But a quick question based on some of the questions I saw in the Q&A. If someone is just putting up standalone solar lights, do we need to have a license to do that? Or is it for the full system?
Pauline, will you take that from me, please?
Okay.
Are you me?
Yes, I'm hearing you.
Yes. So once you are
On JPS's group, you are required to have a license to generate electricity.
So if I have everything else on JPS, right, and I decided I wanted to put up individual solar lights on the property, around the property, I have to get a license for that.
No, that's not a solar system.
That's
if
what
you're
go
you're
on.
installing a photovoltaic system, then you are required to have the license.
Okay, that's what I understood, but I just wanted to be specific to make sure we're doing the right thing, because I had put it in the question, but nobody had answered. So if I just wanted to
sorry
put up,
about that. That is why we had earlier.
Yeah. Okay, so
question. So if
just
you are
ending
installing a system, that's when you need to have the
to have the
license.
license, right? That I got. So if I just want to put up lights around the property, that is a standalone. I still have GPS power in my fridge, my stove, my house lights. I am fine. I do not need a license to put up those solar lights outside. Correct?
Right, because in that case, you won't have anything feeding back to JPS in case you produce more than what you are utilizing.
Right. Okay. Cool runnings. Thank you very much. That's all
You
I
are most
needed.
welcome. My pleasure.
All right.
Okay then. Well, if there are no more questions, I want to thank you wholeheartedly for taking the time to be here. It speaks loud and it says a lot to us that there are 133 taxpayers who want to be shrewd in business and who want to get on top of their game in submitting an accurate S04 income tax return. We commend you and we thank you wholeheartedly for taking the time to be here. Walk good and be blessed. We hope that whatever has been said and done, that you will be able to benefit from it and that you'll be able to use it this year in submitting an accurate S04 income tax return. Walk good.
And all the things that you do.